Let's take a look at everything we should be digesting at the open now with Chris Weston over at IG in Melbourne. Chris, kind of confusing, so many different things to take into account at 10 a.m. today, but you're calling the market up 0.8%. Tell us why.
Well, I mean, it's pretty simple, to be honest, Kate. We're just looking at where the SPI was on Friday at 4:10 after the post-market auction in the cash market, and where it is now. So it's up about 40 points. I think, you know, people are looking at the SPI being down, but that's from the overnight SICOM session, which reopened after being closed for all of yesterday, reopened at 5 o'clock. But if you actually look at where things are in comparison to the cash market, it's actually up 40 points. If you look at S&P futures, they're actually up even more. S&P futures from 4 up about 1.2%. I think we're going to underperform that because of the probably the negative China data that we did see from the export side of things, only up 1%. And we've been actually highlighting to clients on Friday there was probably downside risk today, those export numbers. Obviously, if you look at the April export numbers, there was huge discrepancies between what China is reporting for their export numbers. For example, their exports to Hong Kong were up 56% in the month of March. But that wasn't really reflected in some of the Hong Kong data, in the port data, for example, there. So we knew that there was considerable discrepancies there, and the SAF in China were looking to clamp down on some of these irregularities as well. So I think that's going to hold us back a little bit. Of course, the Nikkei is looking a little bit stronger. That had the best day since March 2011 yesterday, and that index will continue to be in focus ahead of the Bank of Japan later on in the afternoon. And then, of course, we've got the US markets very strong as well after that really good non-farm payrolls, which is probably the sweet spot for markets that everyone liked. It hasn't changed anyone's assumption of QE tapering. I think that was probably the best result that they could have had. And then we've had the S&P upgrade to the outlook last night as well, which I suppose is a net positive. So all in all, you can have a look at some of the data in Japan, Chinese data, some of the information in the US, and we've got a market that we think will probably open about 40 points higher. And BHP's ADR probably from Friday is up about 1.6%, so we may see some strength there as well, despite the moves down in commodities.
Yeah, I've read a lot of different analysis when it comes to that China data. CommSec's calling it fairly benign. I can see other headlines suggesting that it came in much worse than expected. I know you said you were warning clients of risks to the downside ahead of that. How did you appraise it overall?
Well, I think the question everyone's looking at with exports is whether this was down to a clampdown by the Chinese authorities on the effects of irregularities between orders and outflows and bits and pieces, or it was actually because of lower end demand. And I think this was probably more to do with the irregularities and the clamps down we've seen within their guidance. So I think the export numbers were weak. You know, we saw the Australian dollar gap down on yesterday when
But it has recovered since then, so what does that tell us?
Well, it tells us that the dollar was sold last night, to be honest. I mean, if you look at euro dollar, sterling dollar, Kiwi dollar, they all had a bit of a melt up, and that was based on James Bullard's comments, Sir Louis Fed president last night. He came out and said that that inflation's still very low, and they should still see and continue with very aggressive monetary policy in the short term. So I think the dollar was offered last night. I don't think this is necessarily an Aussie dollar story, and I think if you look at where the Aussie dollar gapped down to, and it traded below 94 cents last night. If it goes back up to about 95, it would have filled the gap. I think traders will be looking to sell it into that kind of level today. But I think it was predominantly down to the fact that James Bullard came out with some pretty dovish comments last night that pushed the dollar down and pushed the Aussie dollar up.
Okay, interesting. Let's talk Japan. The Bank of Japan in focus again today. We'll be hearing from the central bank there. Now, the US dollar yen pairing. Do you think that we've seen the lows there? Are you buying the dips?
Certainly am. Yeah, I think we are, and I think we're going to see some relatively aggressive moves today from the Bank of Japan. I think probably most of it will be down to stemming the volatility in the JGB market. I think they're going to be looking at increasing the duration of the liquidity they're providing to the banks from a maximum of 1 year at the moment. They're looking at the market consensus is that we're going to see funding operations up to 2 years. That will certainly appease somewhere in the current in the bond market there. We've got JGB 10 years trading at 84 basis points. Hopefully we're going to see a little bit more buying coming through there. We saw a relatively bullish changeover from the government pension fund on Friday. That's keeping things nicely supported. They're obviously taking their allocation to domestic bonds down from 67% down to 60%. But I think the big kicker comes today, Kate, and obviously that meeting will come sometime between 12:30 and 4:30, and then we've got Mr. Kuroda having a press conference. First of all, they're potentially going to upgrade their economic assessment. That'll be the back-to-back months that they've done that. There's every reason they should be doing that after that blockbuster GDP number we saw yesterday. But the big situation comes if they can push back on consumption tax. They've got a big consumption tax increase which is coming through next year. If they can push that back a year and actually bring forward the corporate tax side of things, which they're looking to cut probably in 2014, 2015. If they can bring that forward a little bit, the stock market will love that, and we'll probably see a move higher. And of course, it's very much in Abe's interest and subsequently the Bank of Japan's as well to try and push this market higher into the July 21st upper house elections. He wants to see a stronger stock market from here, and that would be one way they can go about doing things.
He wasn't so successful last week, was he? That third arrow came through, this third plank of his strategy to try and revive the Japanese economy, but the market was largely disappointed.
Yeah, and I think we saw Mr. Amari, who's one of the financial advisors, coming out and saying that, you know, probably gave that about a 60% success record. I mean, most people are saying that we've seen 2 arrows, the third one was fired up and it sort of landed on his foot. But I think, you know, the market wasn't overly confident of that. It was just, we'd heard it all before, to be honest. There wasn't anything groundbreaking in that. So I think he needs to be a little bit more aggressive. He needs to talk more about potentially increasing their J-REIT purchases as well. That would be situational. On Friday, I think we heard rumours going around the market that the Bank of Japan were actually coming out and buying REITs and other sort of more risk associated assets, should I say. And there's more that they could do. They're already near the limit of, you know, they've got these monthly limits on what they can buy, annual limits, and they're nearly at that at the moment with the REITs. So perhaps they can increase the assumption of that, and that could certainly be a lot higher. But what they've done thus far is address the volatility in the bond market. They're going to probably do more of that today. They haven't looked so much at the currency market, and they certainly haven't looked at the stock market. Friday was the first time we'd actually heard them coming out and talking directly about them watching currency markets again. So, you know, perhaps the focus now has been that the Bank of Japan want to see dollar yen moving up a little bit. Remember, if we get into that 90 to 95 bracket, that's where a lot of the exporters in Japan have got their full year assumptions of the currency, and if we get back in down to those range, that would be very negative for the Bank of Japan and certainly for the Abe government as well. So they want to keep it supported above 95 going into the back end of the year.
Okay, Chris, from Japan to Germany, the Constitutional Court there will start to debate these outright monetary transactions this week. Now, this is basically the ECB making purchases of secondary sovereign bond markets. Do you think that this is likely to be a risk event?
I think it will be a risk-on event, Kate. We probably won't know the final assumptions until September. That's when they have to make the final decision. The idea here is obviously that German liabilities are not at stake, and it could unsettle the financial stability of Germany longer term. And basically, Germany can't wear liabilities of other governments. That's ultimately the situation. Now, the big trade-off is between Mr. Schäuble, who's pro-OMT, outright monetary transactions there, and of course, on the other side, you've got the ECB's head, Mr. Weidmann, who is totally against OMTs. So you have this sort of trade-off between the conservative Germans as to whether or not this is actually going to be constitutional longer term within Germany's constitution. So, you know, if they came out and flatly rejected the OMT, then certainly this would be a significantly risk-off event. We've seen, you know, peripheral bonds being heavily bid from, say, 7% in Italy right down to 3.5%. Based on this OMT, and Draghi came out the other day in the ECB press conference and said that this was probably the most effective monetary policy action that a central bank's taken in the last decade, and I totally agree with him. You know, he's done, without even activating anything, without actually anyone applying for this, he's done a fantastic job in communicating this to markets and lowering the risk premium within the euro. So yeah, I think if it doesn't succeed, and we probably, as I say, won't know until September, then this would be a significant risk-off event. However, they've never blocked anything or the constitution on the EU level. They've done stuff within Germany, and I don't expect to see this again. The market consensus now is that we are going to see some perhaps caveats attached to this to make sure it's more within the German constitution, but it's going to be the main event this week with the Bank of Japan as well, and it's going to be what everyone on the sort of, I suppose, macro side is going to be looking at. And you know, I wouldn't be selling on the back of this, at least until we know a little bit more, but I don't expect to see this being flatly rejected. Okay, Chris Weston from IG, thanks for your take on everything this morning. Thanks, Kate. We've got to take a break. When we